What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 26th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to not only talk about our projections here for Bitcoin over the next coming weeks and months, but on top of that as well, talk about the major blowout day we had on Nvidia, which is the leading GPU manufacturer when it comes to computer components, and therefore one of the best to benefit from potentially an AI revolution. I know a lot of people are really excited about the recent breakout, and I want to spend some time to talk about those quarterly financials, kind of bring things down back to earth and try to talk about whether or not the trend can sustain itself. And we've also got a really exciting interview with Pierce Ridyard from the team at Radix. Later on in the video, it's one of our sponsored partners here on the channel we've worked with for a long time, so stay tuned for that. You guys won't want to miss it. It's going to be a jam-packed episode, and if you happen to enjoy it, consider dropping a like. It's one of the best ways you guys can support the channel. So let's go ahead and kick things off. Now, I want to go ahead and start off here by talking a little bit about what's going on with Bitcoin's price. We've continued to maintain a red trend here on the daily time frame since back at the beginning of the month around May 6th. And on top of that, we're at practically our lowest price point here around this low range, the lowest we've seen since back here on March 14th. So there is really no significant trend here in Bitcoin's price to the upside. And while we're not seeing a major flash sale to the downside, it's not all happening here at lightning speed. We are slowly but steadily, I think, seeing a very clear sign as we've come out of the kind of range of previous support, now acting as resistance. We've come out of that range from back in April. It's been over a month and a half here now that we've been continuing slowly but steadily moving lower. And once we really get that trend flip here over the next week or so, that's when we're looking to potentially build that official short position. That's what we're looking for, that real confirmation, because when we get that red flip, it is usual that it is going to last for a long time. And that is where we generally are going to lead down towards our target range of a third lower level here comparative to the two prior lows. Now, I want to make something clear here, guys. As I'm building a short position and then eventually looking to flip and go long, it's important to understand that we're not waiting for exactly one particular price point at the end of the day. We're going to be building our short here when we make that entry, but we'll be taking profits along the way and averaging more heavily, inversing against the trade as we go lower here, building that long-term position. But really, as we think about it, we've been seeing here clear with the price, the narratives are not holding up here. I want to go ahead and actually build on that here. We talked a lot about how a lot of the narratives just don't hold up for crypto right now, but there's also another dark shadow we got to consider here when it comes to the crypto space, which is that crypto is essentially being shadowed by the AI narrative. AI, whether it be stocks like Nvidia, whether it be Microsoft, which has a large stakeholding in companies like OpenAI, and therefore its exposure to ChatGPT and the technologies that it owns. Essentially speaking, this is the new darling narrative that everyone's really excited about. It's the new shiny toy that everyone's attention is focused on, and all of the optimistic liquidity and attention is going towards AI. And the proof of this is when Nvidia gaps up 24%, showing a clear risk-on signal in the market and optimism around AI, and Bitcoin itself on the daily time frame is doing practically nothing. In fact, it's holding at its lowest point since as far back here as March. So when we talk about this, we've got to consider the weights here that crypto is up against. You've got the grayscale discount. There's still a significant discount on a whole swath of Bitcoin in the market that people could easily scoop up, right? There is the Mt. Gox liquidation event where people are slowly selling Bitcoin out. It is not going to be a net positive event in any way, shape, or form. It is a net negative. There's outflows. And then you've got the narratives that people have been using for the bull market narrative. Oh, there's the bank run and the people are, moving their money out of the banking system. We've already shown through stablecoin liquidity that's likely not true. There's also the de-dollarization argument. Well, again, as we discussed here, the dollar index over the past couple of weeks is moving higher here and quite substantially to its highest level since back in mid-March, inverse to Bitcoin. So we're not seeing that play out here. The dollar is winning out against other global currencies. So the whole BRICS narrative, all that's kind of collapsing. So all those narratives that have been benefiting Bitcoin are faltering. The altcoin market is bleeding. AI is doing great. And these are two very clear, distinct narratives. The market is showing that, guys, but I think it just makes sense here. While blockchain and crypto might be cool, it is a different narrative from AI. It is a different type of technology. Web3 is not AI. I know there's some projects out there will tell you otherwise, that they're combining them together, but you guys know this if you've been in the space for a while. People match buzzwords and they try to drive the next narrative, whatever it may be. At the end of the day, we need to stick to our guns and understand here the case in point. The crypto is its own thing. And if it can't keep up here with the AI narrative, that's going to be a problem for investing in crypto. And that's why I'm estimating we're going to be going towards lower capitulative levels. And that's when we can start to get long and start to see some long-term accumulation from large-scale investors that will help to drive that broader rally over the next couple of years. Now, let's go ahead here. We've talked a little bit about crypto. We'll come back into crypto later on. I want to go ahead and talk about the AI narrative here. I know a lot of people are really excited about what's going on with Nvidia. We gapped up 24% after the quarterly earnings report after they had a pretty substantial beat on revenue. I'm definitely going to say that the quarterly financials looked great to a large extent. However, the thing that's not great is the valuation that people are giving this company and the PE multiple that people are paying for it. Let me go ahead and explain here, okay? So Nvidia here has now blasted to new all-time highs as of yesterday. It went past the previous bull market highs of November 2021 when liquidity was infinite, people were speculating, there was a lot of demand for GPUs and gaming processors as there was a lot of consumer confidence in the market. So keep that in mind here, right? We are above that range to a substantial degree here. And this makes relative sense because Nvidia had a pretty substantial beat on its Q2 projections for quarterly earnings. When it was previously expecting to generate just $7 billion in revenue or sales, it generated over $11 billion, a $4 billion beat on sales, which is pretty substantial. However, another important thing to note is that it did beat on its actual profit margins. It was estimating to make around 92 cents per share, but ended up making $1.09. So that's definitely a nice solid beat here when it comes to estimates and would likely follow in line with the revenue beat. However, we've got to go ahead and talk about the fundamental flaw here. Nvidia at the end of the day is a growth stock. It is going to probably continue growing its revenue and income to some substantial degree, or at least keep in its 2020-2021 range when it comes to revenue and income. That's an important thing to note here. If we go back here towards this Yahoo article, it's important to note that back last year, the comparative earnings for the entire year was estimated towards around $1.36 per share. So we aren't back to where we were in the 2020-2021 range when it comes to net income. But I think it's going to likely get there considering the demand for it. I'm not going to be too biased there and try to tell you guys, oh, it's going to collapse or anything. But let's go ahead and talk about something here. Because while revenue might be growing here for Nvidia, the important thing we've got to consider is profit margins. Nvidia is not some, completely pie in the sky new company where we don't have some kind of estimates for where it could grow. Essentially, we know what is generally possible here with artificial generative AI, not AGI, not a lot of the advanced things that people think are just right around the corner, right? Generally speaking, with ChatGPT and these tools, we know what kind of demand could really be here, considering that we've had the data since back in October. And right now, even with the earnings beat that Nvidia had, while I think it's a great long-term company that we're keeping an eye on, it is generally valued at right under $1 trillion valuation at a PE multiple for the trailing 12 months of 158. Now, let's go ahead and just try to look at some other stocks here to pull some inspiration. Take a market leader here like Apple, which has continued to just go straight up and to the right over the long term since back in the early 2000s, continuously delivering product after product that always made them a cash cow as time progressed. Well, Apple over the last decade generally maintained a PE ratio roughly of around 15, give or take here, throughout most of the growth period. Went a little bit higher here towards around the 20 to 30 range during the 2020s, during the kind of era of peak liquidity. So 15 to 30, 150. So that's Apple. Let's take Alphabet, right? A little bit more of a kind of high growth stock here. It's always maintained roughly around this 25p multiple, sometimes having anomalies where it went up towards around 30 or 40, maybe up to 50. But at the end of the day, generally on 25, 150, right? We can see this with countless stocks. Microsoft, as it was growing out its different business models like Azure, its cloud servers, and cloud business. And on top of that, you also have the Microsoft 360, 360 suite, 365, its Office suite tools, and you also have as well the development of Microsoft Teams. Microsoft has been seeing a higher PE multiple as it's proven that it can be also seen as a growth stock. 25, 30, 150. And of course, you have a few outliers. Ones like Netflix and Amazon that people really betted against, that weren't making money for a long time, and therefore their PE multiples could spike up like this because they were basically growth. They weren't making any money. They were keeping margins then and usually losing money, and then eventually moved into their more normalized valuation here, as it usually was around 50 to 80, right? So what's my point here in all this? My point here is that Nvidia is not some pie in the sky stock, in the sense that we don't really know what kind of money it can make and it's solely focused on growth. No, it's making money, right? We know predictably how much it can make to some degree, even if their revenue expands 2 or 3x from here, right, over the next decade, right? We know reasonably what Nvidia should be valued at. And it should not be at a valuation of 150 when it comes to its PE multiple. I know some people say, look at forward PE and look at some of the other metrics. But guys, at the end of the day, this is already an insane valuation, even considering future growth. When you consider that the margins were better during this period of time on an annualized basis. My main point is this. If you guys want to have some exposure to Nvidia, have that little bit of a bet on AI being this really big thing, or even a substantial amount of your portfolio, that's fine. Right? I'm not here to just bash on AI innovation. I think it's really exciting. I think I've used ChatGPT, Bard, I've used all these tools. I've really tried to sink some time and use them. And sometimes they can be really useful for very niche things like, really kind of surface level writing. It can be a great coding assistant if you're trying to learn how to code, or might need something to kind of lean into to help you in debugging issues. But it's not something that senior software engineers are using to 10x their productivity. It is not something that is going to allow you to write entire pieces on its own without actually putting your own thought and words into it. You can't just automate everything. It has use in some plugins and tools, but it's not going to be something that is going to absolutely transform the world unless people learn how to use it. We find out how to use it in productive ways. And on top of that, at the end of the day, if we're able to go beyond what ChatGPT 4 and other models can do right now, they're relatively smart in many ways, but they still have their flaws. They still sometimes present false information. They still don't understand sometimes when you give them very clear prompts. And it is not something that, again, is going to allow you as an individual to go out and just build some multi-trillion-dollar application. You still got to have the drive to build something. You're going to have some know-how, and you're likely going to have to hire a team of people. It's just that simple, guys. Whether or not you're betting on the AI narrative, whether you believe in AI, AGI, or those kind of higher levels of AI, which we haven't reached yet, that's subjective. That's where we can debate about it. Artificial general intelligence is not generative AI. Generative AI is what we're experiencing now. And it's very easy to get these kind of acronyms and our theories about AI wrong, because at the end of the day, people estimate always when these technologies become the new hype that it's the S curve, that the most optimistic scenario is going to play out. In the moment that Nvidia is not able to continue maintaining their margins or continue beating out earnings and quarterly growth, that PE multiple is going to drop substantially. They can meet quarterly earnings. The price to earnings is going to drop because people are starting to feel the noise. They're starting to hear, oh my gosh, music has stopped here on the hype train. It's substantial. Maybe there's something to it, but it's not beating out quarterly earnings each and every time. That is why people pay a high premium. The market starts pricing in future growth ahead of time. It's the same reason why Nvidia, a lot of the stocks, Netflix and a lot of those high growth stocks of the last decade did really well. And the bigger question we got to ask ourselves here now is whether or not this can continue to sustain itself considering the contraction of liquidity in the economy. The M2 money supply has dropped by $1 trillion over the past year. And the Fed is continuing to contract liquidity from here on out for the next coming months to the next year. Question is, will Nvidia keep accelerating? Will there be the economic backbone to really drive those quarterly earnings reports? Time will tell. Nvidia's got other business clients they need to service too. Gamers, the people who have been really driving the value for GPUs for a long period of time. And if that consumer sentiment goes down, you're going to need more and more to lean into that generative AI narrative that's just going to somehow make up for it. And I think this is a part of a bigger conversation here, which is that we are now seeing yet again, just like here in July of 2020, that technology stocks, especially those big tech plays like Apple, the FANG stocks, and also names like Nvidia and AMD, they're now starting to swallow up valuation and market share within equities. And the question is, can they really maintain that? That same question was asked during the dot-com bubble, and the answer was brutal. It was a major repricing of equities. Now, we are not in the dot-com bubble so to speak. These companies are definitely much more, substantial and real than they used to be. But PE multiples have moved up towards pretty ridiculous valuations, and towards a degree where if we're in a contractionary environment, you're buying at very expensive prices. We here on the channel are not so much focused on what's going to be the trend for the next week and the next month. We're worried about what's going to happen for the next couple of years. If you aren't thinking about that just yet, and you've got a lot of capital exposed to this space, maybe even made some profits along the way, might be time to start considering to have some cash on the sidelines. We like to buy into capitulation. We like to buy when no one is thinking about buying here. And one of those plays here is the altcoin market, because there are going to be a few gems here that are going to make it through. There isn't much going on in the crypto space right now. A lot of the noise has really flown out, whether it be DeFi, NFTs, you name it. A lot of people have stopped building. A lot of people have left the space. A lot of liquidity is starting to leave, or it's stagnant. We need to be sharp and think about when we get these kind of discount prices, when we start going down towards those new lows, what plays are going to be out there that are going to lead the way. There is one layer one protocol that I'm actually really interested in at this point. There are a couple other ones that I think are quite interesting, but this, to me, is really the one that I feel like I can put my money to my mouth and really get excited about, and that's Radix. So I want to spend some time here today during this interview to sit down with Pierce Ridyard, who's one of the heads over at Radix, that's not only helping to bring Scripto, Cerberus, and all of these components that make up Radix and make it such an exciting protocol to life, but also is building a really exciting ecosystem within the crypto space, proving just how powerful all of this is together. Let's go ahead and dive into it. And if you guys enjoyed this video, consider dropping a like, but let's go ahead and kick off the interview with Pierce. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with Pierce, a longtime friend of mine in the crypto space, and one of the heads over at the team at Radix. I want to spend some time to catch up with him, talking about one of our favorite protocols here on the channel, Radix DLT, talking about some of the really exciting developments that you guys have over the coming months and what you've really had over the past couple of months as well when it comes to the developing ecosystem around Radix. I want to talk about Babylon, as you guys have been slowly rolling out these phases steadily over time. It's now coming up towards late July, where we should be expecting the major upgrade to go live. And also want to talk about kind of the forward roadmap once Babylon goes live. What are we expecting? So Pierce, thank you, man, for making the time. It's always good to have you here. We have you every couple of months, and it's a good check-in, not only on Radix as a project, but also the space, because you guys have a good lens into that.
Thank you. Great to be here, and thanks for having me on again.
Yeah, it's always a pleasure. So I wanted to go ahead and kick things off, because since Alexandria launched a long time ago, back in December 2021, it's crazy to think that was so far back then. So back in December of 2021, Alexandria went live. We started to see Scripto and the framework to actually build blueprints and applications within the Radix ecosystem. And now we finally are starting to see these phases come out for Babylon. And it's amazing that we're in a really kind of, I think, negative sentiment market right now. It's a difficult time to be excited about crypto with the market sentiment. But we've been seeing tons of applications come out from the developer and grant programs that you guys are launching. So I got to ask you, being kind of at the helm of everything, how are you feeling about it so far? Like, I have to say, I'm quite impressed with what I've seen.
I'm feeling really good. I mean, the numbers on their own have been incredibly bullish for us on developer numbers. So like, we launched our programming language Scripto at Alexandria, as you rightly said. That was the launch of Alexandria, was when we first released Scripto to the world as a development tool and sandbox programming language. So it wasn't on our mainnet. Olympia, which is our current running mainnet, just allows you to do transactions and staking. There's no smart contracts on there. And we took that we took the decision, not lightly, to release our programming language well before we integrated it into the platform, because we wanted to get that feedback and iteration. And in the first sort of few months of that, it was really played out that it was the right thing to do, not to just smack this programming language directly into the public ledger, but instead build a community of developers around it that would give us real-time feedback. And we went through, 4 or 5 versions within probably the first 2 months of the programming language, to sort of like keep iterating until it got more and more intuitive. And we're really seeing the sort of the dividends from that now. We just passed the sort of 12,000 GitHub repo clones, which is basically the number of developers, unique developers who have tried playing around with our programming language. And we're seeing sort of routinely now seeing our highest months ever in terms of messaging activity within our developer community channels, specifically talking about building applications, building, you know, DeFi apps, building DAOs, building sort of real stuff on the Radix network for when Babylon comes along, which is when we integrate the programming language that we built, Scripto, into the running version of the public network, Olympia. And that's when these applications can finally go live. So what's been really exciting has been top of funnel, like sort of the number of people are coming in. You know, 12,000 developers is nothing to to shake a stick at. And then the next level down, we're also seeing some incredible activity within the community of what people are building. Like we just did our last DeFi programming challenge, which was called the Build the Next $1 Billion DApp with Scripto, and that was with DevPost, and the entries for that were mind-blowingly good. Like I think, you know, one of your favorite projects that you were talking to me about was stoichiometric, and like this team, I think it was a couple of people, may have been one person. I think actually it was only one person. Yeah, it was one person, Van Chigu, who built not only a stable coin or a DAO or an automated market maker, but all three things integrated to each other in Scripto on his own for fun, and fully working with a front end. And this for us is what we always wanted to do with Scripto. It was that you could have a superpower in Web3 and DeFi. You could have a superpower just by using Scripto because of how much easier and how much faster you're able to produce what feels like really complicated applications, but in a very simple, intuitive way.
Yeah, I think this is a great visualization for me, to be honest, Pierce. Like, as you mentioned, there was the grant programs and this developer program to build like $1 billion application. And I think, to be honest, like seeing that you're already finding people doing something, which I really haven't seen much in the EVM ecosystem, where essentially you're building multiple applications from within one interface that, as you said, interact with one another. The fact that we've already got a decentralized stablecoin, an AMM, and a DAO all within one ecosystem or one project from one developer before the mainnet with coding functionality has really come out there at full swing for Babylon. I mean, that's insane. Yeah, I mean, and as you said, like it's important to note that while Scripto's been around for some time, as you mentioned, as the initial release came out to Alexandria, for those couple of months when you went through iterations, developers have really only been able to really start showing these applications over the past couple of weeks and months as they've had the full swing capabilities to be able to build with Scripto. So I think it's amazing, like the results you guys have gotten from these grant programs and developer programs is really exciting to see. We are in a bear market right now where not a ton of eyes are in the crypto space. I have to say, I disagree on one thing. I think, you know, basically having the count of developers that you guys have in this market with a new language tells a lot about Scripto. And also, I think one thing too that is quite exciting.
And we're growing. We're still growing. We're growing at like 12%. 12 to 15% per month in the number of developers who are coming in right in the middle of this bear market. Like that on its own for me tells you everything you need to know about what the difference is between how capital views the market and how builders view the market. Like the narrative of this is the next place that you need to be concentrating on if you really want to build something exciting in the fintech space, or you want to build something exciting in the technology space. You need to be looking at Web3 and DeFi. And so that's where you're seeing real developers come in, and developers aren't looking at the charts and going, oh, it looks bearish to me. They're looking at the possibility of the technology and going, that is so exciting. Oh my God, here's this new tool set that I can do something that I've always wanted to be able to do and never been able to do before because I didn't have the tools available to me.
Yeah, no, I mean, it's really, like I said, Pierce, it's incredible. Like the fact that one or a few people can build something that used to take supposedly millions of dollars of capital or dozens of developers to build, and not only more developers, but more time. I just hearing what people have said, that was the initial thing that sold me on Scripto as a language. I had known about Radix for some time. We had known each other for some time, but I really, when I started to hear how you guys were approaching developing the language by going out to developers, working backwards, learning from the experiences of people developing in Solidity and other popular languages, and the bottlenecks that they experienced, building a language to solve for those issues dramatically simplify the developer experience and also the concerns around security.
Yeah.
That was alone what initiated me to get interested. And when I heard the results of what people had, especially the ones that you mentioned in the comments from Radfi, where people are essentially giving all these positive messages and kudos to you guys for what you built and what it gives to developers, I think it's huge. And, you know, seeing the budding ecosystem is really exciting. But as you mentioned, Pierce, like, you know, we've got, you know, these major upgrades that you guys are pushing through. There's sometimes sub phases to those upgrades. Alexandria was pushed down in late 2021, but with Babylon, there's already been some initial phases rolled out here, and the official final release is going to be in late July, around July 31st, if I'm not mistaken. So my question is everything still set according to plan for that to launch? I know that validators need to approve and push through that upgrade from my understanding. So, but just curious, how are things looking on that end from like the internal side?
Yeah, they're looking great. Like we know we've done the release candidate network version 1 came out about a month ago. That's been running well. We've learned a bunch of stuff. We're going to be doing release candidate v2. That's coming soon, and that will come before the 31st of July deadline. We everything's looking on track. We've the wallet development's progressing well. The Node Runner development's progressing well. The programming, like the final phase of like hardening everything, is progressing well. We're in full swing of our audit to make sure that, you know, we've got that stamp of approval as well. So like that's all going according to plan and according to schedule, and it's just now we're really in the final phases of it. It's like just making sure that everything's hardened. You're not really adding extra functionality at this stage. You're just making sure that everything that you wanted to work for is triple checked, and you're making sure that you can't end up getting the system into a stupid state. So like sort of extra testing where you're doing sort of chaos testing, where you're like making things fail and you're sort of injecting malicious code and all that kind of stuff. All that fun stuff is now happening. So that means that and it's all looking good. Like honestly, I think the process that Radix has gone through has been sort of one of the longer development cycles in the entire industry.
Yeah.
But that longer development cycle has given us that time to make sure that we're building each layer of the stack very conscientiously. I think we're the only layer 1 protocol in the world that has ever decided to sort of release each layer sequentially. So like going from consensus, and then the like this first part of the execution engine, and then like opening up the execution engine, and then adding the programming language on top, and then doing the user experience stuff with the wallet, and like making sure that each of those phases has like 1 to 2 years of testing, or at least like sort of like customer feedback and user interviews. And so like that slow approach to engineering, there's a really good reason for it. A lot of people say, you know, Radix should move faster, should go to market faster, should try and do these things quicker. But like if you look at the crypto space and you look at actually at the layer 1 protocol level, things move really slowly once you put the protocol live. And when I say really slowly, I mean glacial, right? Like the time it's taken Ethereum to go from sort of Ethereum with proof of work to Ethereum with proof of stake, which has nothing to do with the state model of Ethereum in terms of like
it doesn't deliver the scalability improvements of sharding and all the other major upgrades that are going to have to come down the line. Right.
So like this slow moving way in which it's very hard once you've shipped something to change means that we had to make some very careful architecture decisions along the way that we were only able to do because we were able to spend a bit more time on building all of this stuff, which is why Babylon for us is such a big milestone, because Babylon is when we're fixing in, you know, sort of smart contracts run on top of the ledger. So like all of our architecture decisions, or a large part of our architecture decisions, have now been made, and that means that we've built it in a way that doesn't preclude this sort of like linear scalability at the layer 1 level with all of this incredible smart contract functionality that we've been able to do only because we took this sort of much more methodical approach to release, to test, and to iterate, and to understand what was necessary to be able to reach the end states that we thought were important, not just going, oh, we need to get to market, because if we don't get to market tomorrow, the market's going to disappear. And like, that's just not true.
I think a great example, and I don't mean to bash on like Ethereum, but I think it's probably the most relatable, kind of example for all of us, because there's a ton of developer time put into it, a lot of people using the network. I think the problem is that, Ethereum's a well-meaning network, and I think they accelerated the space in many ways. But the problem is, exactly as you said, Pierce, you're bottlenecked by so much of the foundation that you've already deployed. When you deploy something to mainnet, it's very difficult. You have dApps, real money, people who are validators who are participating in the network. You can't afford to break things when it comes to a protocol. It's not like a lot of startups will say, move fast, break things, and kind of fix it later, right? You can't do that in like a decentralized protocol. And I think that you guys understood that. I mean, Cerberus, correct me if I'm wrong, but like with Dan and the team, like they've been working on Cerberus for a very long time. This has been the consensus layer, the base layer for settling transactions and getting confirmation. That has been in the works for a long time. And now with Scripto, there was multiple iterations of it. You guys took tests. Now, I think the approach on the developer side, I know a lot of people in crypto are always worried about missing trends, missing bull markets, but all of this is so short term. I think long term, what you guys are focused on is the $1 trillion plus opportunity, like really DeFi coming in and actually establishing itself. And I got to say, I think it's the only path forward, because at this point, you've seen the Ethereum ecosystem, so many EVM forks, Solana, all these networks, a lot of great developers putting time and resources into these networks, but getting trapped by the same bottlenecks. And we're now at a point where DeFi is kind of stagnant. And the question is, like, are we going to build the real ecosystem that can actually take it to the next level? Or are we just going to say, oh, we'll just do another, yield farming protocol, or, just some kind of like thing that's already been done? We need to have a framework that's going to allow for the next generation of applications. And that's the
analogy I always have. I 100% agree. The analogy I always have for this is that deep tech takes a really long time, right? Like the sort of like OpenAI wasn't an overnight success. It didn't just suddenly appear and they decide, like, they've been working on it for a really long time, right? And I always compare this to let's say you and me, we have a competition as to who can build the tallest building, right? And you start building immediately. You start building upwards immediately. You're getting your bricks, you're getting your mortar, you're getting your sticks or whatever, and you start building up immediately. I start digging. And you're like, you're going the opposite direction. What an idiot. That guy's digging a hole and it's about building the tallest building. What the hell are you doing? And I just keep digging. Right? And then I pour in the foundations. And then at that point, I start building. And my building towers above you over time, but it takes longer because I had to build the foundations in the first place. And a lot of crypto feels like that. It's like everyone's just going, oh, we just need to build the next building. It's
people are stacking like cardboard boxes on top of pencils and like just hoping that it won't just all come crumbling down at some point. Oh, we got exploited. Like, oh dang, okay, that's normal, commonplace. No, I mean, that you're exactly right, Bruce. It's again, so much of the traditional developer practices, and I know we've talked about it, but like good quality code review, going through open source criticism, talking to developers. People don't listen to developers nowadays. It's so sad, because they're the ones who are going to build the value on networks. People cater usually so much more towards investors. So I think your guys' developer centric focus is very, very key to Radix's success. And I see that you guys are constantly maintaining that. You're providing resources to people who want to build real value and real applications and create the value that people are going to come for to Radix. But I'm curious to think about this now. So you guys have everything kind of set in pace. Let's go ahead and say that on July 31st, Babylon launches. What do the next kind of 6 to 12 months look like? I'm curious. I know it's probably going to be focusing, as you said, on not so much developer features or adding additional features to the network, but
Yep.
really taking it live, getting those applications out there, getting liquidity in the ecosystem,
Yep.
getting people using it, and then taking in feedback and then iterating for that next layer of development.
Yeah, so I mean, like, it really then goes over to the, once 31st of July happens, it really does go over to the ecosystem at that point, and it has been incredibly exciting to see the kind of projects they're actually going to be launching. We've got a bunch of dexes, Caviar Swap,
Mm-hmm.
DeFi Plaza, Aussie Swap, Alpha Dex, and a bunch of other ones like that I'm just seeing now, like Beaker, and DSOR and Astralescent. There's all of these projects that are coming, that are building the what I call the DeFi primitives. So like the ability to be able to trade. Then there's people who are coming along and bringing and building stable coins. So Ethereal DAO is building a stable coin like MakerDAO style on the
Yeah.
platform. We've got like all of this interesting tooling around there, like RDX domains, or XRD domains, who are building the infrastructure that allows you to have human readable domains, both for applications as well as for your sort of wallet addresses and things like that. You've got these sort of really interesting applications inside the lending space, and like from the tools that we've seen come out of, from the competitions we've seen for the last entry, there's obviously a bunch of stuff that we don't even know about that's coming as well in perpetuals, and in some of the sort of more esoteric areas of DeFi. So that like first wave of applications, and I'm not even talking about gaming here and NFTs, but there's like a
No.
whole section of there's a huge NFT culture already emerging in the Radix ecosystem, be that radical penguins or scorpions, abandoned scorpions, and then there's also things like Photon, which is a marketplace which is going to be building, which I think looks incredible, like beautiful design work. And all of these things go live on the 31st of July. And then it's really about how the ecosystem evolves. And we're still doing stuff like we're partnered with Layer Zero to make sure that Radix is cross-chain as quickly as possible, allows you to sort of reach out to as many of the ecosystems that are out there as possible, so that we can have, people moving resources and assets and users between the different ecosystems, be it Solana or Ethereum, whatever. But like this is the starting gun for these incredible projects that have been building, some of them for like over a year now, since we built our programming language. We've been building these incredible communities, and actually in some cases have already like got quasi dApps up and running, and have got users. So like Aussie Swap has built an incredible community and has already been doing sort of trading volume before smart contracts even go live. So like all of this stuff is really like it's like a dam that's been sort of building up over time.
Yeah.
And we're going to see that sort of first sort of projects really sort of start to come to the fore when Babylon goes live. Though the thing I will say, and it is important, is that we are not trying to make Babylon, the launch 31st of July, a big bang event, right?
Mm-hmm.
Like it is still a brand new protocol that is going live, and I still think it's important that people are cautious when a brand new protocol goes live. So
that's
like
true.
we aren't saying like sort of at the 31st at the 1st of August, YOLO.
How about it? Use all the applications, go all in. Yeah.
YOLO in all of your capital immediately. But like we are saying that when the 31st of July when it goes live, 1st of August, download the Radix wallet and go and explore. Go and like find out what new stuff, what new functions, not what new features are now possible as a result of this incredible user experience and dev tooling that is available to make the sort of the user the possibility for new Web3 and DeFi applications to actually be mainstream, right? Like the big thing for us, and we haven't even talked about it really here, is this user experience of of Web3 and DeFi. And with the Radix wallet plus the applications that are going live, I think that finally we've got this opportunity for people to be like, oh no, I actually could recommend this to my friend, rather than be like, there's no way in hell I would recommend my friend to use MetaMask.
Yeah. No, I have to say that's another component we didn't even get to chat about today, is that another layer you guys focused on is the user experience of the crypto
Right.
space. And again, I think at RadFi, that was for me, that was the kind of the final selling point and stuff, because I honestly think from a protocol, I always kind of felt like, like perhaps people could build better front ends. Maybe it really is just that the designers are missing something here and they'll finally pick it up. But you guys brought up a very fair point, which is so much of this is either you have to go through incredibly complex routes in the Ethereum network to try to build something similar. Like, for example, like I remember with my prior wallet we had like that kind of feature of wallet account recovery and stuff. But but really, like, it was so difficult to build something like that in Ethereum. You have to maintain it. It's not something that's native within the ecosystem. Right. And all of the user experience issues of hexadecimal code when you're signing a transaction, I hope I'm doing the right transaction, or I hope I'm not interacting with a malicious contract that will drain all my liquidity. That's the kind of stuff that still bottlenecks this ecosystem, and we just kind of take it as normal. Same with the hacks and everything. So, man, I have to say, Pierce, I'm so excited for this next upgrade, man. And I know it's a nervous thing at the end of the day because it's got to go live at some point. But you guys have been patient. You've been time tested about it. You guys have been through up and down cycles here and there in the market. And I'm really keen to see how it's going to go. It's not too far away. It'll be here before we know it. And one thing I just wanted to ask you, Pierce, like, if people want to get involved, because as you mentioned in the RadFi speech, you're early, but not for long. Like, essentially, I'm curious, like, for people who are kind of like interested and kind of itching to learn more, maybe even becoming a developer within the ecosystem with crypto, what's the best place for them to go? And I'll leave the links down below in the description, guys, but take it away, Pierce.
So if you're interested in learning more about crypto and building on Radix, I highly recommend you go to developers.radixdlt.com. That has all of the resources that you need, but it also has all of the links to our communities. The Discord community is fantastic. So if you're someone who's built a lot of stuff before, you know that it's not just the tools that you have available, but the people you can ask to help you out. So I really recommend joining the Discord, joining sort of like there's a bunch of crypto developer channels in there. And then I also recommend, just going and having a play with the programming language. The programming language is just exceptional. It's nothing like you will have experienced before if you've built anything in Web3 or DeFi before. If you've used Solidity, if you've used Rust or anything like that, and then you touch crypto, you'll understand why so many people are getting so excited about this programming language. And then on the other side, if you want to follow us and make sure that you're kept up to date as to when the Babylon goes live, as to when you can get your hands on the new Radix wallet, how you can like find the ecosystem projects, then follow us on Twitter at RadixDLT. And then also there's a website called Radix Ecosystem, which is radixecosystem.com. And if you go there and click projects, you'll get a list of all of the projects. This is maintained by our community, a list of all of the projects that are going to be going live after Babylon. And you can start the process of working out, well, which ones am I interested in? Which ones will I want to get involved in? And really, like, from a user testing point of view, like, all of these people, they just need people to come in and play around with what they've built and like give them honest, helpful, constructive feedback. Like, this is what makes the industry. The industry isn't made by the capital. The industry is made by the users. So be a user. Go and use the actual applications. Don't just sit on coin base and trade. Like, lean in and become a real user, because that's actually what moves this industry forwards, not trading.
As you said, I think once the DeFi primitives are kind of established, it's going to be incredible to see what people can build from that once you have liquidity and native stable coins and kind of some structures and entities in the space. How people are going to build on their ecosystems that already exist or entirely new ones. It's going to be incredible to see. Yeah, Pierce, thank you so much, man. I'll leave the links down below in the description, guys, so you guys can dive into that. As Pierce mentioned, now is the time to kind of do due diligence, check into the developer portal, check into some of the ecosystem projects. I'll leave those as well as the core website down below in the description. Pierce, man, always a pleasure to have you on. I'm so excited to see how things go. I love that you guys are honed in on getting this launch live in July. And as always, man, to you and all the team, hats off, and really thank you for making the time to come on today.
Thank you very much. And yeah, looking forward to talking to you again soon.
Yeah, man, we'll get you back on soon.